Hey everybody, welcome back to Dividend Stockpile, where we talk about all things dividend income investing related. In today's episode, we're going to continue our series on how to build a dividend growth portfolio from scratch. So, an overview of what we're going to talk about today. So, I'm going to give a public portfolio update to show you where I'm at on this particular portfolio. Going to go over some portfolio news. There's a lot of things happening with the companies inside the portfolio. We're going to go over the dividend increases I've received since the last episode. We're going to show the details of the current holdings and how many of each holding we have and how their total return has been over the time we've had the account. And then I'm also going to go over the current watch list that I'm going to potentially be adding more companies to this particular portfolio. So let's get going. All right, so to give a little bit of a background, I started this portfolio back in September of 2024, and the goal of this was to show new investors or people who are just getting started with dividend investing how to build a portfolio from scratch. If you're watching any of my previous videos, you understand that I've been working on my portfolio for over 25 years now. And so for some people, just getting started can seem overwhelming to look at someone's portfolio that's been building it for so long. So I built this real money portfolio with the goal of explaining how I would approach a new portfolio and then hopefully give some ideas to other people on how to build their own. So I started off with a $3,000 initial deposit, and I'm going to be adding $600 every 2 weeks into this account when I get paid. All right, so the current portfolio has the following holdings: AbbVie, Agri Realty, Federal Agricultural Mortgage Corporation, Air Products and Chemicals, BlackRock, Costco, Chevron, Alphabet, Lockheed Martin, Lowe's, Microsoft, NextEra Energy, and SEHD, the Schwab US Dividend Equity ETF. All right, so moving on to dividend news, you can see that AbbVie announced the acquisition of Nimble Therapeutics. And so this gives them additional drug pipelines that they can use to offset their reliance on the existing drugs. Anything about the pharmaceutical industry, the companies are only as good as their next product. So having a robust pipeline is going to only help AbbVie. Also in BlackRock, they announced a big acquisition of a credit investment manager, HPS Investment Partners. And so that's going to allow them to push further into the private credit space of the market, which is a growing part of the industry. So again, BlackRock is my favorite company. It's one of my largest holdings, and they just keep on getting bigger. So that's a good announcement. All right, so Costco announced their earnings released a few days ago. So they beat on non-GAAP earnings per share, and they also beat on revenue. So it was a good quarter overall. Looks like they are growing their adjustable sales across the world. So again, consistent, good news for Costco. Happy to be a shareholder. Google had a big announcement that they released a new quantum computing chip called Willow, and this particular chip is supposed to be groundbreakingly fast and far advanced than any other chip out there. What used to take millions of years of computation time now can be done in just a few minutes. So a lot of people were concerned with Google is falling behind on the AI race, and this development really shows that they're on top of their game, and they might even be leapfrogging some of the other competition. So again, great to hear. Lowe's released their earnings, and it looks like they beat on both earnings and revenue. It's great to see our companies continuing to beat Wall Street estimates. They also announced their full year 2024 outlook. So their total sales are supposed to be up a little bit, and comparable sales are going to be down a little bit, but in line with expectations, actually a little bit better than expectations. So again, nothing of note here. It continues to be a very strong company, and I look forward to holding them for many years. And a very interesting news on NextEra Energy and Phillips 66, ticker PSX, announced a partnership to build out solar power on one of the Phillips 66 refineries. So it's really interesting that NextEra Energy, which is the leader in renewable energy here in the United States, is partnering with what many would consider a dirty energy company, Phillips 66, to help offset some of the carbon footprint of Phillips 66. They are paying NextEra Energy to build out a solar array at one of their facilities. So it's great to see that the market is interested in NextEra Energy's products, and they partner with them to build out the future of energy in the United States. So we had one dividend increase over the last month since the last video, and that's SCHD, my number one ETF and one of my favorite holdings. So they announced a Q4 dividend of 0.264 cents per share. And you remember earlier this year, they split their stock 3-for-1. So this is actually the highest dividend that they've had. But if you take in the stock split, it looks smaller. So the total amount that they paid out in 2024 is 0.9943 cents per share. Looking at 2023, they had a total of 886 cents per share. So that's actually a 12.22% increase over the last year. This is why I love ACHD. You get a solid 3.5% yield right now, plus an annual increase of 12.22. You really can't beat that. That's what dividend growth is all about. All right, so dividends received, we're starting to get quite a few coming into the account. As you can see here, we received a dividend from ADC, which is Agri Realty. We received a payout from Google, from CVX, Microsoft, Nextera Energy, and SCHD. So the dollars are starting to finally come in. As most people know, that dividends are typically paid on a quarterly basis. So we just started this account in September. So we're really starting to see the first set of dividends coming through the account. So it's very exciting. All right, so a total portfolio update. You can see all the different holdings, all the different shares outstanding, how much my cost basis is, and the current value. So we've had a couple that have done extremely well over the last 3 or so months. But there's been some that haven't done so well. So the ones that have done the best is Google with a plus 24% share price increase. And then we also have BlackRock and Costco doing really well at 15 and 11.5% increases since we bought them. But there have been some companies that haven't done so well so far. To note is Lockheed Martin and AbbVie. They've both decreased in value since we bought them, but we're going to continue to dollar cost average and over time. We're not looking to sell these positions anytime soon. So we're just going to keep adding to the count. And maybe there's better value to be had in Lockheed Martin and AbbVie now since the prices have gone down. Overall, in this portfolio, since the beginning of the account in September, we're up $303.15 in total return. That comes out to about 4.38% total return on this account. Well, I'm happy with that for a couple of months. It has underperformed the S&P 500 pretty significantly since the portfolio started. The S&P 500 is up a little over 12%. So again, we're not looking for total capital appreciation. We're looking for growing dividend stream over time, but it is always important to check to the benchmarks to see how you're doing. So again, we're falling behind the index right now, but that's because, the mega tech, the Teslas and the Nvidias and things like that have shot up so much over the last few months that it makes it hard to compete. But over time, I feel like this is going to be a very solid portfolio for my needs, which is dividends and dividend income. All right, looking at the same portfolio, a couple other updates. You see the 52-week high and 52-week low, and the percentage off the 52-week high. This might give you a good indication of what you might want to focus on if you're adding to the portfolio. As you see, AbbVie is down almost 17% off their highs. Lockheed Martin's over 20.5% off their highs. So those might be good values. Same with Nextera Energy is a little short of 15% under the 52-week highs. So if you were going to pick and choose which investments you want to purchase going forward with new money, those might pique your interest. Overall, the beta of the portfolio still stands at 0.88, and the goal is to have a beta lower than 1, which 1 represents the volatility of the S&P 500. So we're having a less volatile portfolio. And with that, we're going to have probably lower returns for the risk we're taking because we're trying to be more conservative. It shows the current dividends and current dividend yields, as well as my dividend yield on cost. So based on my purchase price, my dividend is getting me the amount that it shows and the dividend percentage by cost. And then we show the 5-year dividend growth rate of each of the holdings in the portfolio. And then following up, we have the chatter rule, which is a combination of the current dividend yield plus the 5-year dividend growth. We're looking for a total chatter rule of over 10 at least. Ideally, we want to get it up to 12 or higher, so we have a little bit of work to do there. The payout ratios, generally speaking, are pretty good on all the portfolios, and we're getting about $153 a year in current dividends from this particular portfolio. The average dividend yield on the portfolio is 2.25%, and the average dividend growth is a little over 9%. So it's a solid combination, but we still have some work to do to increase that up to the 12 that we're looking for. All right, so the watch list hasn't really changed that much since we started the portfolio. There are a couple companies that are looking interesting based on the valuations, but as you see here, we have the current prices, we have the 52-week high and 52-week low. Percentage off the 52-week high is something to really maybe take a look at. As you see, ADM, which is Archer Daniels Midland, and Target are both significantly off their 52-week highs. So with the market being so highly priced right now, looking for values, these two might be something to look at if you like all the rest of the criteria or the financials for those particular companies. It shows their current PE compared to the historical PE. And just for example, the target historical price to earnings ratio is about 19.4, and it's trading at 14.26 right now. So it's pretty significantly undervalued. And if you look at ADM, it's about fairly valued based on their historical metrics. One that's piquing my interest more and more as time goes on is PepsiCo, PEP. Currently is 16.7% off their 52-week high, and their PE is 23 when their historical PE is 27, and the beta is only 0.54, which is half as volatile as the overall market. So that one's definitely piquing my interest, but I haven't made any decisions on if that's going to be my next purchase for this account. But I'll keep you guys informed. The goal is to get it to about 20 total positions, so I have some work to do, but I'm not in a big hurry. I'm going to take my time to find the right companies at the right time. All right, and finishing up our watch list, here's some other names that you might be interested in. Again, nothing has changed on my watch list. I haven't added or taken away anything, but it just gives you some ideas of what else might be out there that's worth looking into. All right, so hopefully you appreciated this update to the real world, real money portfolio. I'm going to be continuing to do this series on a monthly basis to show how it's possible to build a dividend growth portfolio from scratch. Really appreciate your time and watching. And while you're here, check out this next video. Thank you again, and remember, keep stockpiling those dividends.